Welcome back. You're tuned into Buy Now Sell Now, where we are taking all your queries and getting them answered by both our experts. And you can start writing into us on the number that's flashing on top of your screen. Please do write to us stock-specific queries with the buying price and your holding period, and we'll get them answered by our experts. So let's get going with all the stocks the questions that you have asked us for. The first question is coming from Hyderabad by Ikambarya. He writes he holds Tejas Network 125 shares at a buying price of 1,265 rupees. Is it the right time to average or hold? Kunal, I'll come to you. And this stock has started moving up. In the last 1 month, it's seen some good moves. In fact, today also it's up. It was up almost 8% in the morning trade on the back of that big order win of 189 crores from the government. But on the charts going ahead, how does it look like?
Yeah, I think at current levels of 790 thereabouts for Tejas Network, it's a good buy at current zone. The stock seems to be coming back into a very strong support zone, and this too on the long-term charts from 2023-24, which is closer to 650 to 700 range for the stock price. So I think at current levels of risk reward, it's very attractive, and especially given the fact that the stock is almost half from the 2024 highs of 1400 plus.
Right. This one is coming from Shashi Kumar, writing to us from Bangalore. He wants to know about IOC. He's holding about 100 shares of IOC at a price of around 164 rupees per share. He wants your advice on this one, Rajesh. IOC, what's your take on this? Should he actually stay put with this one or look to exit his positions?
Very bullish on OMC stocks as such going forward, because of the fact that crude is trading at almost around 70, 72 odd dollars. That's a good news for the entire OMC pack. The margins have been improving, and the best part is we believe that some rollout from the government will come for the OMC in the near future. Maybe that might come. Dividend yield is good. Even at these levels, they are trading at huge discount to the intrinsic value. So if you are a long-term investor having a time horizon of 12 to 18 months and no issues with timing, you can even add at these levels, I would say.
All right, that's the take coming in on IOC and OMCs in general. But Kunal, coming to you, this one's for you. This is Karishma, who's writing from Delhi, and question is specifically for you. She wants you to suggest some multi-baggers and your opinion on a bank stock that you could suggest for her.
It's difficult to give a multi-bagger, especially in this kind of a market scenario, but I would suggest that currently we are into a phase where sticking to large cap names could actually turn out to be a good strategy. And I think maybe once the market stabilizes, once we are past these kind of issues in terms of volatility, I would probably expect the mid caps and small caps to make a very strong and ferocious comeback. So maybe buying on a staggered approach could be a decent approach if you're looking at select mid caps and small caps. From the banking name, I would actually believe that even Kotak Bank, even at current levels of 2100, 2150 thereabouts, I think is a very good buy. The stock has completed a big breakout. It's almost like a 4 to 5 year of consolidation breakout for Kotak Bank. I understand that the stock has run up 10% in the last 1 month or so. We've been bullish on Kotak Bank specifically, but I still believe that there is a lot more headroom on the upside for the stock to move up higher if you're looking at large cap formidable names.
All right, so that's the take coming in on the stocks that could look good. Kunal, coming right back to you. Actually, I have a couple of queries only for you, but let me take this one. Coming in from Jay, he's writing to us from Mumbai. He's bought about 1,000 shares of TCS at a price of 3,989 rupees per share for the long term. Technically, how is it placed on the chart? Is it a hold or a sell?
See, I think it's going through a tough phase, and I think over the last 1.5 odd months, we've been very skeptical on the IT index, especially I remember, I think, when TCS managed to break below the 4,000 to 4,100 kind of levels, there was a point we flagged out that TCS could actually start to go into an underperforming spree, and especially the IT index at large. So I think we've seen that leg playing out. Maybe it's a phase, where TCS could underperform. My sense is that the stock would underperform for at least another 3 to 4 months, if not more, in terms of the relative returns for the stock with respect to its other peers, as well as the Nifty IT index with respect to other sectors. So I'm not sure whether you're looking at it from a next 3 to 6 month kind of a time horizon. If that's the case, then maybe in case the stock comes closer to your cost price, you can look at an exit and shift to other large cap names. But if not, and if you're looking to hold on to this stock for the next 3 to 5 years, then this is just a cycle. And once the cycle ends, you'll probably expect stocks like TCS and Infosys to make a very strong comeback. The only question is that how far these stocks can fall in this leg of a cycle now.
All right, Kunal, that's the take coming in on TCS, and the entire IT pack in focus today, reeling under pain with cuts of more than 2.3 odd percent. But coming to you, Kunal, yet again, you have another fan. This is Revant who's writing to you. He says that he closely follows your analysis and has made good money from your relative strength analysis study on Nifty Energy and Nifty Bank. He says that he's sitting on 100% cash now, and his question is that now that Nifty has touched its 50 DMA, can you recommend stocks and the buying levels for that?
Thank you so much for that. Quite an exhaustive point. Yes, I've been bullish on energy index as well as the banking index at large, and we did flag off the relative strength over these two sectors almost a couple of months back, where you've seen stocks like NTPC being one of the formidable ones in terms of relative gains. We also looked at metal counters like Tata Steel, which looks attractive. Now, looking at current zone, I think there are a few interesting names which are coming out on the charts. And from the auto pack, interestingly, you've seen Hero MotoCorp and Bajaj Auto. Both of them are looking quite strong in terms of risk reward. There seems to be a strong case that a near-term bottom could at least be in place for these names. So if you're looking at a pure risk reward play, these stocks could start to look attractive. You might also want to look out for potential breakout names, the likes of Geo Finance. That's a chart which has been looking attractive, trading at I think 228, 229 thereabouts on the spot levels. That's a stock which I believe is headed towards an inverted head and shoulder pattern on the short-term chart. So these are a few names which you can look at, which you can track.
Right. Talking about the next query, actually, this one is for you, Rajesh, coming in from Sudha, and she has a sizable or lump sum amount that she's looking to invest. She wants to know whether it makes sense to go ahead and invest in the Avenue Supermarts as D-Mart as well as Trent with a time horizon of about 3 years and hoping that she can double her money in the next 4 years.
Double or not is a difficult call to take at this point of time because, in fundamentals, every quarter the numbers come and then we have to take a call whether hold or not. So at this point of time, yes, both on the valuation front is looking good, especially Trent. Today the news was they have opened 1,000 stores and they are doing very well. It corrected quite a lot. They moved into lab diamonds and other things too. With the kind of store opening and kind of expansion they are doing, I think at these levels one can go long on Trent.
All right, that's the word coming in from Trent. But let's move on to another stock query, and this one's for you, another big fan of yours, Kunal. He says that the first trading session of the year, Buy Now Sell Now team and all the experts, he's congratulating all of us and he's thanking all of us for the insights, and he says that he's a big fan of Kunal. He's Anand from Bangalore. His question is on IOB Bank. He's holding 1,000 shares at an average price of 54 rupees for 2 years. Should he exit, or should he hope for recovery as the fundamentals are still looking good? And the second question is on ITC Hotels. He's holding 250 shares at an average price of 210 rupees. Should he buy, average, or exit? Kunal, this one's for you.
Thank you so much for that, Anand, for those kind words. Now coming straight to your two queries which you have, IOB as well as ITC Hotels. IOB is an interesting case. Yes, I understand that many of the PSU banking stocks, they've been beaten down significantly in the last 1 year. But an interesting case for IOB is that the stock is going through almost like the 8th or 9th consecutive month of a downtrend, if I'm not wrong, on closing basis. Now, this could probably be a steep of at an extreme correction for a stock like IOB, because you've seen that whenever stocks go into such kind of a sharp corrective phase on a consistent correction, there's bound to be a comeback which the stocks exhibit, and that comeback ideally takes the stocks back towards their 2 month or 3 month, previous 2 month or 3 month swing highs. So I think in that case, I would suggest that it's better to just wait out for maybe another couple of months. If there's any kind of a short covering spree which comes back, then I would believe IOB can come back towards 45 to 50 levels. That would be a better zone where you must shift from this stock to some other quality name. As regards to ITC Hotels, of course, the history is price history is a lot more limited. But then whatever we've seen over the last 1 month or so, from 180 levels for ITC Hotels to now 205 plus mark, where the stock is trading right now, I think it's looking like an excellent chart and very strong potential candidate for a big up move over the medium to long term.
All right, let me take this next query. It's coming in from Manish. He has about 1,000 shares of Aarti Industries at a price of 650 rupees per share. Rajesh, what's your view on Aarti Industries?
I would say try to exit on any upticks because the fundamentals are not that great. The industry is reeling under pressure. Although it has corrected quite a lot from higher levels, but still going forward in the near future, we don't find any reason to believe that there would be some amount of re-rating. So any up move to maybe 440, 450 odd rupees would be levels to exit.
All right, that's the take coming in on Aarti Industries. Next one, this one's for you, Kunal. This is Jay Krishnan writing from Kerala. He wants to know at what levels can he buy Siemens and Bajaj Finance for the medium term?
See, I think Siemens you can buy at current levels because my belief is that many of these stocks, the capex related names, I think these stocks would probably have formed a decent bottom for themselves. And rarely do you get an opportunity of a 20% to 30% correction into these stocks. They are like once in 3 years, 4 years kind of an opportunity. And historically, they've actually proven to be very good zones where long-term investors have actually built their portfolios surrounding these names. So I would suggest that you can consider buying these stocks at current levels.
All right, so that's the take coming in on those counters. On that note, we slip into a break in this edition of Buy and Sell. Now, when we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy and Sell on ET Now, show where we get you answers for all of your stock-related queries. Not that great going for the markets at this point in time. Remember the fact that we were shut shop in yesterday's trading session, and remember that the global markets did not have a good run yesterday, nor did we see a great close on Friday for the US markets, and today we are having that sort of a rub-off effect on our market. Some of the stocks are reacting to news-based information. Trent is seeing a good up move. Morgan Stanley has come up with a note. They believe that the store expansion is picking up, the store additions are picking up, so that's one of the reasons why Trent is in focus. SBI's card, watch out for that stock because the MD and CEO of the company has resigned. So SBI card is also actually getting knocked out in trade today. SBI cards is a counter to watch out for in trade today. 3% downtake coming in. No doubt, Kunal, we're seeing a very jittery, volatile market, and I think right now what people have realized is that should they take that bet for the long term or should they look at short-term charts? I know short-term will be very difficult for you, right? I just want a caveat for all of our viewers, given the fact that there are too many moving parts for all of these counters. And it's not only stock-specific news or the technicals that are actually trying to indicate which direction a stock would move. It's also the news-based information that actually tries to meddle around with the charts, isn't it?
Yeah, so there are two, phrases which are very, very important for traders, investors, or someone who's looking at this kind of a correction for the first time. I think first is that good prices and good news, they never come together. Yes, we are at a point where the news flow is extremely negative or supposed to be extremely pessimistic, but then the markets have discounted the kind of news flow we've seen in terms of the prices. We are already down more than 30% to 40% for many of the stocks in the mid caps and small caps. That doesn't mean that there is no room for the stocks for these stocks to go down lower. But then I think there comes a point where even in phases of the price correction, there are pit stops where these prices go into a corrective phase. So you have to try and pick and choose your portfolios quite strongly over here. But the second and the most important phrase is that never waste an opportunity, and in this or never waste a crisis. And I think in this case, over the last 6 odd months, what we've seen is a sharp correction. You have to look out for building your portfolios in these times, which can last and the worst phases of the markets, as well as you can probably enjoy the good phases of the markets, which will eventually make a comeback pretty soon.
Actually watch out for when you talk about the technicals. I want to come to you, Rajesh, because right now it's not just one sector or a two sector story. It's going to be a couple of sectors that will be directly hit or indirectly hit with the entire tariff announcement. How should one actually build their portfolio right now for the longer term? Because the amount of queries that I am getting today for technical view, in fact, out of like 20 queries, only one fundamental query I'm getting at this point in time, and I'm finding it too difficult because I don't want Kunal to be on like a Shankar Mahadevan spree where he's talking breathlessly over here on the show. But Rajesh, since I want to give Kunal a 2-minute break, I want to get your view, especially how should one actually gauge the entire market, given the fact tariff will hit auto, will hit pharma, will hit IT, it will have an indirect impact on the chemical space as well. So how should one actually watch out for all of this?
See, it seems to be a bad day for me. And Kunal is having a field day. KKR is not performing and Mumbai is performing. Right? So anyways, coming to market, I think these kind of Trump tantrums or whatever you give a name are something to be worried about in a short term. For traders, of course, there are worries because every day morning something new comes up. And with 2nd April looming ahead, tomorrow only. I think people are waiting for some kind of announcement to come. But as per media reports or some news, I have also heard that that might be postponed for maybe 2 months or 3 months. But these things are going to stay. It's will be there till such time Trump is there. So we have to adjust to that. And the best part is India as a country is growing. We have seen GDP numbers improving. We have seen inflation going down. We have seen IIP numbers going up. We have seen RBI cutting rates, and we hope that in the coming meet this month, RBI will again do something for rates or maybe CRR or liquidity or something of that sort. So these are best things to happen for our country. And the best part is government's capex, which was almost zero in the first half of the financial year, has started taking up. And it's just a matter of time when private capex also starts. So these are all positive things, and these kind of downfalls in the market are an opportunity to build a long-term portfolio. So every time when the market's in a higher note, people say that girega tab lenge. And now when the market has fallen and people say or girega tab lenge. So this is classic case of greed and fear. I would say if you are not comfortable buying at this point of time, people should not sell their good stocks, I would say. Or otherwise, it's a very good opportunity to go long on quality stocks where the fundamentals are strong, the numbers have been improving, there's a quality management, corporate governance is good. Have a time horizon of 12 to 18 months and go long. As far as sector is concerned, we have seen news flow coming in that auto is going to be hampered, that which we all know. IT is also going to be take a hit. But then these stocks have taken a hit of 20-30% from the top. It's not that every day the news will come that IT is going to go down and again IT will go down by 20%. So somewhere or the other fundamentals will take the front. And you have strong balance sheets in IT companies or in maybe Infosys or TCS. They might not give that kind of return which they have given in the past. But at least a 15% CAGR return in the next 2-3 years is quite possible if you are comfortable with that. So I would say choose good stock, stay for 12 to 18 months, and you may outperform FD rates, I would say.
Rajesh, there's a couple of takeaways there. Never miss an opportunity to buy. This was a great opportunity to buy on dips, and also a bottoms-up approach where the valuations are ripe, and of course stocks that are fundamentally strong will take the lead. But coming to you yet again, Kunal, since we're getting a lot of technical queries, this is Richie who's writing. He says he's a big fan of Kunal and he holds Maruti shares right now, and he wants to know, is it a good idea to shift out of that and move into Adani Ports or NTPC for short-term gains?
Thank you so much for that. Now, shifting from Maruti towards Adani Ports or NTPC would be a strong strategic bet. First of all, of course, you're looking at diversifying this from cross sectors. The second important part is that both the stocks like NTPC and Adani Ports, they've had a decent uptick over the last 1 month or so. So there could be a possibility that you might be into a phase where these stocks may correct a bit for a couple of days before you see any kind of a major comeback to these names. But I think out of the two names which you mentioned specifically, I would actually look out for NTPC as a much more stronger bet. As I said, short-term wise, maybe the stock has run up. If in case you get the stock maybe another 3 to 4 percentage points lower, that could, I think, be a good entry point for a stock like NTPC.
Alright, so that's the take coming in on NTPC and some of the other counters. This next query that I have is coming in from Akhil, and Akhil is being very considerate at this point in time, and he said that it's a fundamental view for Mr. Rajesh. It'll give some rest to Kunal. So let me take this one to you, Rajesh. He has about 1,200 shares of IRCTC at an average price of 692 rupees per share. He's saying that he's holding on to this counter since the year 2022. How do you see this one in the future? Should he sell some of part sell or his stake in IRCTC in order to go ahead and buy some other counters at this point in time?
See, we have been very surprised by the kind of dull movement IRCTC has given in the last 2-3 years, I would say, despite the fact that it operates into 4 basic divisions: ticketing, rail neer, that's drinking water, catering, and tourism. And out of these 3 businesses are almost monopoly. In fact, ticketing and railway and catering. These three are monopoly business which this company has. Debt-free company, no corporate government, gives out good dividend. And as the number of Vande Bharat trains are being introduced, that's a direct benefit to companies like IRCTC. And not to forget, they have tied up with Zomato. They are going for full coach booking. They have started outside catering also. Everything is good for this. Fundamentally, it's very sound. It's just a matter of time when it starts performing. So it's a buy from our side at these levels.
Moving on from that, coming to you, Kunal, then. This is B. Soumya writing from Chennai. She writes that she's bought Central Bank at 48 rupees and JSW Energy at 642 rupees. Wants to know the short to medium term holding period. Also, she wants to know what can be the target price for these two counters.
See, Central Bank, I'm not sure what's your rationale for holding the stock, but I would believe that if you get it, say closer to your cost price also, it's a good time where you should look to exit, because it's better to try and switch to performing names, and especially at a time when the markets are going through this kind of a chop and churn. I would recommend maybe a few odd stocks which on a relative strength basis have been looking attractive. Union Bank from the PSU names is one of the stronger names so far in this leg of an uptrend. SBI, of course, is one of the more formidable ones from a medium to long term, so it depends on your time horizon as well for Central Bank. The other query, Ankita, was the other stock?
The other stock was JSW Energy, which she's bought at 642 rupees.
Okay, so JSW Energy, I think, is a fantastic chart. I looked at this over the last 4 to 5 years. I remember, I think, tracking the stock when it was at double digits, 77 or 78 levels, towards the point when the stock went 10x. I think at current levels, the stock is looking very attractive. Your purchase price is much higher. I would believe that if you're looking to buy or average further, I would suggest closer to 450 to 500 zone is where you should look to average JSW Energy, and then potentially the stock should make a comeback towards 650 to 700 mark at least over the next 6 to 9 months.
All right, this one is coming in from BJ Kulkarni. He's writing to us from Bangalore. He has 2 shares of Trent in his portfolio, which he's purchased at levels of above 5,000 rupees per share. Should he add some more on dips, as well as what's the strategy there? If you look at the stock, it did dip quite a bit actually. Rajesh, now what's your take? You think this is a good level to go ahead and add some more Trent in the portfolio, given the fact today you also have a positive note that's coming from Morgan Stanley, talking about the fact that how the store additions are picking up pace, and yeah, Trent seems to be a very formidable player when it comes to that particular segment.
See, as discussed in the show sometimes back, I still maintain that Trent is a buyer. Depending on the time horizon, if you have 12 to 18 months time horizon, Trent is a good buy at this point of time. Not because of it has corrected from its top, but because of the fact that the store addition is very good. Today, there have been announcement of 1,000 stores coming up. They into value retailing, doing very well. And if you compare the fundamentals with margins and all the with other players, this is on a better footing. So it's a buy from us.
All right, Rajesh, I'll come to you yet again then. Another long-term query coming in. This time it's Mr. Joshi is writing from Kerala. He wants to know if this is the right time to purchase Alembic Pharma. Now, the pharma counters are in focus, of course, on the back of that reciprocal tariff. What is your view coming in on Alembic Pharma? Is this the right price to get in?
See, if you are trying to enter into pharma names at this point of time, I think it's better to be in a frontline names like Cipla or a Dr. Reddy rather than going for Alembic. Although Alembic is a good company, have given out good numbers, but into the mid-cap space where the vulnerability is very high. So at this point of time, when there are a lot of uncertainties going forward on pharma, it's better to stick to larger names.
All right, so that's the take coming in on the pharma space, and also which are the stocks that you should actually watch out for when you talk about the query was on Alembic Pharma. Let me take this next query then, and this one is coming from Amit. He's writing to us from Surat. He wants to know about Tata Technologies, 3,000 shares at a price of 1,020 rupees per share. Hold or sell? Kunal, will you be able to answer on this one?
Yeah, you can continue to hold on to the stock as of now. The good part is that there are strong evidence on indicators, especially the MACD as well as the RSI, which are now coming back into a slight uptick mode. And after this, this comes after almost 4 to 5 months of the stock being to a major downtrend. Remember, I think from 1,050 levels, the stock had broken below the 200-day moving average, and that had led to a much more intense correction for Tata Tech. But it's just that right now the stock is looking a little bit more better than what was maybe 4 or 5 months back. Once the stock confirms a breakout, that would be around the 750 mark, is where I would believe we can even consider to average Tata Tech.
All right, moving on then. With that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back and we'll get all your queries answered on the other side. Stay tuned. Welcome back. You're tuned into Buy Now Sell Now, where we are taking all your queries and getting them answered by the experts. You can keep writing to us on the number that's flashing on top of your screen. But coming to you, Kunal, now then, this is Radhakrishnan who's writing from Bangalore. He says that they hold Bajaj Auto at the current price. What is the target for a 12-month period? Wants to know if they can hold this for the next 12 months, given the price movement on Bajaj Auto.
See, it'll be a bit tricky to, frankly, look at 12 months because I'll say why. Because, the stock is at the cusp of a major inflection point on the quarterly charts. Now, on the quarterly charts, for example, when the stock hit this, level of 7,600, I think last month or so, or in the previous quarter, the indicators for the stock on the quarterly charts has come back into a major support point. Now, what happens if in case the stock breaks, say, sub the 7,400 mark? That could indicate that maybe the stock could get into a sharper corrective phase, and that corrective phase could actually last for maybe few quarters for the stock price. But if you're asking me that whether this, if in case if a short time horizon is a bit more short term, then there is a higher case that the stock may bounce first before it may come back into retest of the previous major support lines of 7,400 odd for Bajaj Auto. So depends on what you're looking out for. If you're looking at this as a pure long-term play, then I believe that you can continue to hold on, but just keep that 7,400 mark as a very crucial and important support for Bajaj Auto. On the short-term basis, I would believe 8,200 to 8,500 could be a potential target range for the stock.
Alright, so that's the take coming in on Bajaj Auto. Let me take this query coming from C. Ganesh. He's writing to us from Bangalore, though he is asked actually a view from Kunal, but let me take your view, Rajesh, on this one. He has about lump sum amount of about 6 lakh rupees. He's decided to equally invest for the long term in a CG Power, in a Geo Financial as well as PFC. Do you think this strategy is right? Makes sense to equally divide the amount and park the monies in these three counters?
They are a good company, no doubt, especially if you talk about Geo Financial after the kind of correction it has witnessed and the kind of future prospect the company was. We are very bullish on this. As far as PFC is concerned, company has been doing very well. Asset quality has improved. They give out good dividends. And CG Power is also a very good company. After it moved to Murugappa Group, they have been doing very well. The numbers have improved. All three stocks are good. But for CG Power, I think it has run up quite a lot. Wait for some more time to correct, maybe at levels of 550, 500, 550 levels would be a better level to enter. But Geo and PFC at this point of time is a buy. If you take my suggestion, you can even add Reliance at the HDFC Bank for a long-term horizon in these three names too.
All right, moving on then. Coming to you, Kunal, then this is Anant Naik who's writing in. He says that he holds 60 shares of Arvind Limited and he's bought it at a price of 364 rupees. Wants to know whether he should add more at the current price.
Well, not to add at current price, but just wait out for maybe a slight bit of an uptick for Arvind. Because what's happening is that the stock is establishing a base for itself at this 300 mark. I think this is the third or the fourth attempt for the stock in the last 2 or 3 months, where the stock has fallen into that 300 to 320 kind of a range. If in case the stock gets into a bit of a turnaround and say moves up to higher of 330 plus levels, that could confirm that we are looking at a solid base being built for Arvind at current levels. The indicators are also on the verge of a breakout, so maybe another push, a little bit more push on the prices on the upside is where you can see the breakouts happening from the indicators. That could have a positive effect on the stock prices also. So 330 plus is where I would suggest that if you're looking to average, you can do that for Arvind.
Right, Reliance, actually, you did speak briefly about it, Rajesh, because we have Vasu from Bangalore already has Reliance at the price of 877 rupees per share. Hold for the long term or exit? Hold is the call, is what I believe is what you have said. But what are the key triggers one needs to watch out for Reliance Industries?
It's a buy from a side. It's not a hold. It's a buy from a side because of the fact that the numbers have improved despite the strong capex. Its debt is into manageable levels, debt equity ratio, I would say. In future, whenever some corporate action happens in either Geo, that's the telecom one, or the retail one, that would be a big booster for Reliance, I would say. Geo has been adding numbers very swiftly in subscriber numbers, ARPUs have improved. They have moved fast into 5G and all. And as far as the retail is concerned, have they have been adding retail stores like anything in the recent past. The store count has gone above 18,000 odd. So both these companies are doing very well, and that's the big booster for Reliance going forward. And the fact remains that it has not done anything from the last 1 year or so. That's another thing to add to this story. So Reliance at this point of time is a strong buy from our side from at least a time horizon of 18 to 24 months.
For the fundamentals and for the long term, that's Reliance Industries for you. But Kunal, would you concur on the charts for Reliance Industries that it would be a buy or a hold at this point in time? 877 is a buy price for our viewer, sitting on profit for this one. But what's your take? Because Reliance has not performed as well as one would expect it to have.
Yeah, because of the weight of the stock being absolutely heavy in terms of the index weightage or components of the index. But I think other than that, also Reliance is a fantastic stock to own from a long-term play. And since you purchased at lower levels, I would also suggest that it's a good stock to hold on to. In terms of a fresh add, if you're looking to add, the only technical level which we are waiting on for in terms of a potential breakout for Reliance Industries is around the 1320 mark. This could complete a slew of breakout resistances for the stock on the short to medium term charts. And once the stock confirms a breakout about 1320 levels, I strongly believe that the stock should be good for at least a 10 to 15% of a swing upside on the very short term time frame chart. So that's a level which you can look to add if in case you're looking to.
All right, that's Reliance on the fundamentals as well as technicals. But staying with the technicals, Kanala, yet another trader, short-term investor asking us, this is Ravi Chandra writing from Hyderabad, wants to know, he owns Glenmark Pharma, 100 shares at the price of 1,595 rupees, wants to know what is the target for this month?
For this month, if you're asking me, then I would believe that potentially 1650 could be a decent target range for Glenmark Pharma. See, the stock is nearing its 200-day moving average. Over the last 2 or 3 days, the stock is just about trying to take some bit of support resistances at this average, which means that at least for the next 3 to 5 days, the stock will just about hang around to this 200 DMA. If in case the stock breaks levels of 1555, that could lead to the stock maybe rising up towards 1650 levels over the very short term.
All right, so that's the take coming in on Glenmark Pharma when you talk about this stock, especially on the technical front. But let me move on and let me take this next query that I have. And this next query that is coming in from our viewer Sandeep from Hyderabad. 10 shares of ABB, buy price is 5,500 rupees per share. In the next 3 to 4 months, Kanal, will it go to 7,000?
Well, very difficult to say, as well as very difficult for the stock to come back to 7,000 mark pretty soon. This is the concern with the market participants, because what we've seen 2023-24 was exceptional kind of returns. You can't expect that these stocks would keep on giving you such kind of an exceptional returns year after year. There are cases where post a market correction, these stocks may actually go sideways for a couple of years. Also, there could be a high possibility of that. But so you have to be ready with some bit of a time-wise consolidation into these names. Of course, stocks like ABB, something which you discussed earlier, Siemens, etc. These stocks are good buys from a portfolio perspective. I don't expect that over the next 3 to 6 months, you could probably expect a major uptick into these stock prices. But the price levels where these stocks are, 5,000, 5,300 levels, they are attractive buys from a long-term play.
All right, moving on from ABB India, this is Rakesh writing from Bangalore. He wants to know if he can enter Bank of India now. Rajesh, I'll have you answer this question. Bank of India now financials, the valuations look ripe. It's a consensus call on all the banking names. But this PSU counter, do you see this as a good bet? And can Rajesh enter at these levels?
See, the entire PSU banking space is looking very strong. One, the balance sheet has been cleaned up. They are doing very well, and IMs have improved. And the best part is once rate cut starts happening, their bond portfolio is going to outperform because bond prices are going to go up. And that would add to PSU banking names bottom line. So at this levels, entire PSU basket is looking very good, out of which Bank of India, a Canara Bank, or a Bank of Baroda in the mid-cap names, or even in small-cap names, Bank of Maharashtra is looking very good. Large cap, of course, SBI is the leader. So these are some of the names which are looking very good in PSU banking space. Bank of India is one of them, so you can buy.
Right, so that's the take coming in on the banking space. With that, thank you so much, Kunal, as well as Rajesh, for joining us on the show. Thank you, Rajesh, for being a sport. No doubt, very less queries for you today, but definitely answering all of the ones that were posed to you. Thank you so much, both of the experts, for joining us on the show. But on that note, it's a goodbye from Ankita, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.